Hello everyone, thank you for attending this presentation. Today I will be addressing some accounting activities for sales return reserves for Green Mountain Coffee Roasters based off of their fiscal year 2010 10K annual reports. First, let's start with what a sales return reserve is. A sales return reserve account is identical to that of an allowance. Therefore, it's classified as a contra asset account on the balance sheet. A sales return reserve is an account reserved for the return of merchandise for a refund or for a credit to be applied to other purchases so as to not cause any major over or understatements of income in sales and sales returns. It's an account that the company may not need immediately but is available if required. Here I have prepared a T account for fiscal 2010's sales returns reserve. Included are entries for the beginning and ending balance, acquisitions, amounts charged to cost and expense, and deductions. The amounts listed below are found in the 10K under Schedule 2, Valuation and Qualifying Accounts for fiscal year ended September 25th, 2010. And as seen, you start with your beginning balance at the beginning of the period of $3,809,000. And you also have an acquiring of $31,000, and then you deduct $31,237,000, and you have charged to costs and expenses of $40,139,000, and that leaves you with an ending balance for the period of $12,742,000. This slide shows journal entries for amounts charged to cost and expense and for deductions. And so as you can see, I have debited sales returns, and then I've also credited sales return reserves. This amount of $40,139,000. This is the estimated amount of sales returns charged to cost and expense. And then because you are estimating the decrease of sales revenue, a credit, you debit sales returns, and then credit an allowance for sales returns, aka sales returns reserves. And then secondly, you'll notice this next journal entry, I've debited sales return reserve, and then I've credited accounts receivable. And this entry portrays the actual sales return that occurs during fiscal 2010. We reduce the accounts receivable via credit, meaning we debit sales returns reserves since it is a contra asset account. Here I will explain the amounts included in my journal entries from the previous slide, which are now shown on the right, that appear in Green Mountain's Statement of Cash Flows on page F8 of the 10K report. The image on the left only represents the cash flows from operating activities because that's really all I need for this. And so the provisions for sales returns appears as an increase of $40,139,000 in cash flows from operating activities. And this is shown in the highlighted yellow. It's the first highlighted section on the picture on the left, and then this amount is also seen on the top journal entry on the right. The $40,139,000 is added back into the operating cash balance since it was just an estimate, and the actual sales that were returned in the amount of $31,237,000 is deducted as part of the accounts receivable amount. So the highlighted in orange portion on the left picture, that's the accounts receivables, and though the price is not the same price as listed on the right, it's because that $31,237,000 amount on the right is a part of the larger amount that is on the image in the left. I appreciate your attention throughout this presentation. I hope you learned what sales return reserve is, how it ought to be recorded in journal entries, and how it affects the various financial statements. Thank you.